Hi, I'm Taylor.
And I'm Robert.
And this is We Watch, where we watch movies and let you know how realistic the scenarios can be. And today we're watching Happy Gilmore.
My name is Happy Gilmore. Ever since I was old enough to skate, I loved hockey.
My puck, baby! Don't you ever touch my puck!
I don't know about you. Have you watched this movie?
I have watched this a couple different times.
So, can you quote
some of the good parts, yes.
I got the pleasure of watching it with my fiance recently, and he also loves to quote every line in this movie. So that was fun. Is anger management or therapy tax deductible? Because I think Abby could use some.
Grandma? Hey, put that stuff down. That's my grandmother. Cut it out, kid. We're just doing our jobs.
What are you talking about?
Your grandmother hasn't paid her taxes in over a decade.
What? Grandma, you didn't pay your taxes?
I would have, but I didn't have any money.
Where are you taking all our stuff?
I'm not taking your stuff, okay? The government is. It's not like I'm taking your stuff over to my place or something like that, all right? So don't get mad at me.
But she's
Everybody
an old
always
lady.
wants
I
to
mean,
shoot
look
the
at her.
messengers.
She's
Yep.
old. You can't just take her stuff. She's
Too old. The IRS doesn't care.
I have no
Nope,
discretion.
they sure don't.
Her stuff is now our stuff.
Well, at least we got the house, right? I mean, I can bring furniture from my place over here. We're gonna be okay, Grandma.
Now you're really gonna be mad. I have to take the house too.
You can't take her house.
Mrs. Gilmore owes the IRS $270,000 in back taxes.
Oh, my
We have to
I was gonna say, how realistic do you think that is for a decade's worth of property taxes?
Well, what's her income? She's elderly, so she's probably not working. She probably just has Social Security, maybe some retirement, maybe some death benefits from her husband. How'd she get to $270,000 in a decade? That's my question.
Yeah. Well, I mean, it did say over a decade, but I
yeah.
mean, also, is she not paying any of her taxes? Because he said property tax. So.
Well, she hasn't paid her taxes she hasn't filed her taxes in over 10 years or paid them more than likely either.
Okay.
So there could be some estimates based upon
So we're not
documents
just
filed that the IRS have prepared on her behalf. But for 10 years, there's penalties and interest. Okay. And that is one of the biggest things that hurts a lot of people is the penalties and interest. The tax, in a lot of cases, is actually a small piece of the actual burden. It gets worse and worse over time.
So she's not just paying the taxes that
It's
she
not just
would
the taxes.
have owed.
Yeah, I wouldn't say he kind of misclassified that, but it's penalties, taxes, interest, all of that combined. The IRS can seize your property if you fail to file and or pay your taxes.
Right.
And they have the ability to turn around and sell it to pay off those amounts owed.
But she would have also been receiving like letters this whole time.
Correct. She should have been receiving notices. No, there would have been multiple communications over the time regarding failure to file, failure to pay, whatever the implications were. And there would have possibly even been a visit before this, either from an agent or some other entity, maybe the sheriff's department issuing a subpoena or something like that. But it just kind of depends upon what course the IRS decides to go.
And if you can't get the money together in 90 days, we're gonna have to sell the house to someone else. You hate me, don't you?
No, I don't hate you.
No, I don't hate you.
He hates me.
What we'd like to do to every IRS or no. No, we can't do that.
Cut the golf sissy crap and finish up in there. Relax. Think of it as a way to enjoy your grandma's possessions for another half hour. Oh
I think I could have done a better job than that.
My wife can do better. She doesn't play. I'd love to have that drive.
Sure. So this is all cash to cash exchanging. It's
Yeah.
technically still should be reported, but
Yeah.
more often than not, people
More often
don't
than not, a lot of
realize
people
or
don't report
yeah.
this kind of stuff. And the question is this gambling? Is this just
Betting, yeah.
like some other kind of side hustle type of deal that you're self-employed doing this like
hobby.
yeah. How's this getting classified?
Worry about it.
Oh,
Bring that shit on, man. Oh, God, I love it. Awesome.
Bet your neighbor the accountant.
those are some real good special effects. That fake arm, I couldn't even tell.
Do that.
You win the open tomorrow, you're automatically on the pro tour.
Thought you were pro material. Prime to make the big bucks.
Skirt.
Hey, Chubb. What kind of big bucks?
$9,000. That's
It's a good take. I'll take it.
yeah.
It's a good weekend.
How would that be taxed potentially?
Well, one, he's going to have income tax, but if it was just $9,000, it'd actually be under the standard deduction. So income tax wise, he wouldn't have anything. But more than likely, this is going to be classified as self-employment because he's doing it more than one time
Right.
type of deal. It's more of a consistent
It's becoming
work
repetitive
type deals,
and
and so it is to me going to be self-employment taxable, and so that is going to be something else he's going to have to pay attention to, and that's a 15.3%
yeah.
tax that's outside of the income tax.
Yeah.
Another 4,800 there. He's quickly approaching his standard deduction, so income tax applications are something he's definitely going to need to pay attention to.
Yeah.
12.6, definitely
That's-
exceeding
yep.
the standard.
Oh,
17. We're over the standard deduction. 35.
That's a nice check though.
We're talking where now we want to start. Should we be a sole proprietor? Should we be an S corp? Do we need to become an LLC to help protect ourselves liability wise?
Yeah.
In his case, he might want to if he had some assets that he owned.
Yeah.
Just from his behavior. But
Maybe protect that house.
protect the house if he ever is able to acquire it.
Yeah.
So, but yeah, no, there's definitely some tax applications that he's going to need to talk to someone because, he's up to 70, 80,000 already of income. And has he withheld anything? Has he paid any quarterlies?
Estimated payments.
Whether it's federal or state or both, there's things that he needs to pay attention to. Otherwise, he's going to be in his grandma's shoes.
Right. We're
We don't want
kind of
that.
repeating ourselves
Yeah.
in helping grandma, but at what cost?
Yeah.
What's going on here?
I'm glad you made it. This is very exciting. We're gonna auction off your grandmother's house.
Hey, hold it. You said if we get the money by today, we could buy the house back.
Right? You can buy the house back.
Bidding will start at 100,000.
No, this could be good. We'll get the house back cheaper than we thought.
Add 250 and 225. Thank you. 50 I have.
Maybe not. 275!
Add 275. New bidder in the middle and a 3. 3 now. Add 350 down front and a 375. I have 350 down front and a 75. 75 anywhere. Add 350,000 down front. Sold. Gentleman with the white sweater.
That's some real pettiness.
Yeah.
To spend $350,000 on a house that you don't even want, just so that
Well,
he wouldn't play golf.
he says it's real estate speculation or investment. So, yeah, it could. Hey, it's an opportunity.
It
But
could be.
I agree. It's complete pettiness based upon, the conversation.
If I beat you, I get the house back. You beat me, I'll quit.
You're gonna beat me? At golf? Oh, you're on.
Okay, now the question is this a wager? Is this a sale agreement?
Betting.
Yeah, what's the implications here? Shooter says he's bought this for real estate
300,
speculation
yeah.
or investment. So, okay, if he loses, is this a loss on his investment? Is this a gambling wager? And depending upon his other gambling activity, is that loss potentially, if he were to lose,
Right.
a deductible expense? or deductible loss, that's a question. We don't, there's a lot of things in that brief scene that we don't know transaction wise as to how that's going to get treated regarding
I'm sure
the
somebody
outcome.
could try
Oh,
to report it on their tax return as a loss. It's just, will the IRS take your standing?
Yeah.
Accept your standing?
yes, exactly. And what is your basis behind your standing?
Right.
And does it match or allow for in the code to be deducted? And it all might be dependent upon how that transaction is drawn up.
Yeah.
So.
$20 says the IRS says sucks to suck.
Nah, I'll just beat him now.
Good luck.
Chubbs, I know you're gonna help me with this one.
Well, good luck filing your tax returns. Happy? Yeah.
Yeah.
Probably.
No, they're
In some way, shape, or form, whether he wants to try to do it, if they give him a miscellaneous instead of an NEC and he wants to try to put it as not subject to self-employment tax, that would save him a lot. But ultimately, one, it depends on how it's reported, on what form they use. And two, it just kind of depends on if the IRS at the end of the day accepts it, if it does get, looked at with a finer tooth comb.
Yep. And it may take the IRS a couple years to review it and actually truly accept it. So it's like they do have a 3-year window once filed. Yeah. So again, filing it on a timely manner is important because that starts the statute of limitations, starts the 3-year clock. If the IRS doesn't look at it within that first 3 years, technically you're okay. But unless there's fraud involved, the IRS could open it back up for investigation.
Yep.
So, but yes, definitely a tax situation that he needs to file his tax. Same with his caddy, because I'm assuming he's getting paid some degree.
He got paid in crackers.
And quarters off picking up other people's ball marks.
That he did not get paid taxable wages, I would bet.
But the tax returns need to be filed preferably correctly. But there's
bare minimum filed.
Yes. If he's got the money set aside, depending upon the transaction, how this house went down, he needs to probably pay in some estimates.
Because it's very highly unlikely that anything was withheld.
I very much doubt anything was withheld from his earnings.
Yeah.
So, he's definitely going to need to pay some taxes, need to file some taxes.
On a scale of 1 cold cut combo to 5 cold cut combos, how realistic is this movie?
For the specific tax issues that were listed out, I would probably say 3 to 4 cold cut combos. The ones that are out there that are not necessarily addressed, there are several concerns, but the primary one dealing with grandma's house and the repossession, yes, the amount concerns me, but for the actual implications as to what the IRS is doing, being able to levy the home and turn around and sell it to take care of the proceeds that or the missing taxes that they're needing, definitely a probably more of a 4 cold cut combo type rating.
That's all the time we have today. Thank you for watching with us. Like, comment, and subscribe if you want to see more content like this where we review movies. You can even drop a title of a movie that you would like us to review next. And also hit that little bell button so that you get notifications when we do put up more video reviews for you. We'll see you next time.